Welcome, ladies and gentlemen. This is Pallavi Shetty, your host today for the interactive webinar for the launch of Yes Securities' newest product in association with Investor AI, whose parent company is Bridgeweave. Thank you so much, each one of you, for taking out time from your busy schedule and joining us today. Investor AI, with a mission to make wealth creation easy for everyone, has partnered with Yes Securities to offer the flagship AI-powered Investor AI Follow the Machine FTM portfolios on Yes Securities investing platform. Investor AI FTM portfolios have been built with the philosophy to help investors benefit from the machine-driven investment ideas and auto rebalancing of assets that helps in saving time, efforts, and overcomes emotional decision-making and biases. To implore more on this, I would like to invite Mr. Anshul Azare, Mr. Bruce Kidd, and Mr. Jayprakash Sinha to tell us more about the product. But before that, let me give you all a brief introduction about the dynamic personalities that we have on board with us. Mr. Anshul, with over 2 decades of rich experience in the Indian capital market and financial service industry, has been associated with Yes Securities since its inception in 2013. He is responsible for defining the growth strategy, improving brand equity, and overall customer experience while continuing to build a customer focused franchisee. Mr. Bruce has over 30 years of experience in the financial service industry. He ran two fund servicing platforms and was involved in the launching and development new products in the UK and Luxembourg before joining Bridgeweave founding team in 2018. Bridgeweave with Investor AI aim to empower the new breed of retail investors using big data, quantitative algorithm, and machine learning models along with its behavioral personalization engine. Ladies and gentlemen, and finally on board we have with us Mr. Jayprakash Sinha, who oversees products and investments with Yes Securities, having 25 years of experience across financial spectrum from banking to asset management to broking. He worked as fund manager with SBI Mutual Funds and led equity research and terms at various broking firms like Kotak, Ambit, and Quint. With this, I would now call Mr. Anshul to on the screen and tell us more about this product.
Thanks, Pallavi. The moment hear the word machine, and the one very hilarious scene of a 2009 movie, Three Idiots, come to my mind when the professor is looking for a very detailed book written definition of a machine, but the student is keeping it very simple by telling that a machine is something which makes your job very simple. That's what machines are all about, and we have been living around with machines over the decades now, and we have been dependent on their efficiencies in our lives nowadays, and they are completely entrenched in our lives. Look at where the machines came from. So we're looking back to the 18th century when we had the industrial revolution coming into picture from France and UK. That's where the machines took over the production facilities which were otherwise done physically by using a labor manpower. What machines could do at that point of time is do the labor work which the human used to do more efficiently and more effectively. Later on, with time, as the time grew, we started putting little more brain into the machines, which is like, let's take an example of an air conditioner. Earlier when they were introduced, they will start cooling your room. The moment you start feeling little more colder, you switch off, and then the moment you start feeling more hot, you switch on. And that the human intervention was needed to keep it switch on and switch off, to keep the temperature reasonably okay for your room. Then what we decided? We decided to put that, can the machine do it itself? And that's where the brain was put into the machine and the thermostat came into picture. So thermostat could identify when to switch on and when to switch off depending on the variance in the temperature. This simple aspect of putting some logic and putting some brain into machine for them to learn itself and do things themselves is gone to a very, very different level these days, when we see that the very complex calculations and other things which simply are been simply done by machines. And that's exactly what investor AI is all about, is instead of human intervention of designing a great portfolio, the machine taking the learning from the basis of the last 10-year 15-year data and basis the inputs defined by the investment managers, can come out with with an identification of stocks which is completely unbiased of human emotions and more accurate to the extent of data analyzed by them. And that's what investor AI is all about. Thank you very much.
Thank you so much, Mr. Anshul, for such an insightful approach. I would now request Mr. Jayaprakash Sinha to please take over.
Thank you, Pallavi. So first of all, welcome Bruce, welcome Anshul, uh, and this is our journey of Investor AI and Yes Securities. We have continued in our endeavor to provide most suitable solution to our clients, and Investor AI portfolios are moving in that direction. Before telling us how why we have selected Investor AI and how we have got these portfolios, because we have Bruce, the founding team member. Let's first understand the entire genesis, and then we'll move forward. So, Bruce, there's one question which comes to my mind is we are seeing the emergence of artificial intelligence, machine learning in almost all walks of life, right? And uh, I don't know how many instances this has been used in financial sector, because you are one of the pioneers in the in financial sector. What were the thought process, and how actually this whole thing evolved?
Thank you, JP. Firstly, thank you for inviting me here. We're delighted to be part of this and working with Yes Securities. But I love AI. I want to talk about AI and what we can do with it. But at the simplest level, when you're stuck in a traffic jam, as I have been in Mumbai over the last few days, Google Maps figures out a quicker route for you. The AI is working with the traffic and figuring out a quicker route for you. When you switch on Netflix, unless your kids have been playing with your account, Netflix knows which movies you should want to watch next. It knows more about you sometimes than you do. And AI has been in our lives for years and years. And AI has been in financial services for nearly as long. And if I look at the things that we're doing today with AI, a lot of those things have been in the purview of hedge fund managers and the large money managers for years. So the only way to access them was to invest in a hedge fund or to invest in a large money manager. And what's really happened over the last few years, and what we're trying to do, is to bring that AI, that artificial intelligence, to the man in the street, to the individual user, and give them access to it.
Okay. You're right. You're right. Investing in technology is not everybody's forte, as well as I mean, the wherewithal if you involve. So democratizing AI to the level of where my small investors or high net worth investors can invest uh, is a good beginning point. So how this whole genesis and the journey of Bridge Weave has been so far, and what are the milestones that you have achieved so far?
Yeah, I, really excited to be part of the team and to be on the journey. And what did we set out to do? And we set out at the start to democratize wealth management and to help people, to help individual investors. And I think what's happened along the way is the sheer boom in digital investors. And we've seen that especially through the pandemic. And we've seen lots of new people come to the market. And you look out there, and there's so many different data sources that people can choose from. You could go online and you can Google any company you like on the Nifty, and you'll get so much data about it. And you'll probably get 20 reasons to buy it and 20 reasons to sell it. And there's almost too much data, because what happens is individual investors, they end up all buying the same stocks. Everyone ends up back in the same kind of brand name stocks. And they're not able to use AI in order to go and pick the right time to buy individual stocks. And what we really want to do is we want to bring AI, we want to bring blockchain technologies to individuals to allow them to access wealth management, to be those digital investors. And you and I were speaking about this earlier. AI isn't this kind of machine that is hidden away. AI is like an Iron Man costume, and Iron Man needs Tony Stark. And for this analogy to work, we're all Tony Stark. So if you think you can be Tony Stark and you can wear that Iron Man costume, you can fly. And what we want to do is we want to help people fly. And I truly believe that we're on that journey, and partnership with people like you, I think, is really going to help sort of take that to a much wider audience.
I think, most apt analogy you have given, Bruce. You are right. We have our own limitations as an individual, and we want to break free those limitations. Unfortunately, we rarely had the access of computing power at our hand. While you are democratizing artificial intelligence, the end question to an investor or any individual is, I have 100,000. What should I do? Now, there's a plethora of stocks, 6,000 stocks, but we need to give them an advice or give them an analysis or a stock to buy or sell. Now, how you are computing these things at your end?
I find it fascinating, because what we've managed to do is we've managed to take some technology that was originally used to try and help with cancer diagnosis. So one of the issues with cancer is no two cancers are the same. So what the machines were trying to do was they were trying to spot patterns in different types of cancer treatment, and therefore identify the right treatment. And they do that through this fascinating process where they actually turn data points into images. And as a human being, we all know that a picture speaks 1,000 words. It's the same true for machines. So what happens is we end up with a matrix. We end up with a 30 by 30 matrix. So that's 900 data points. Each one is turned into an image. So you've got this image. You then have that image for that stock for every day for 10 years. Wow. And for every other stock for every day for 10 years. And what the machine's doing is it's looking at all the images in a single day and reviewing all that and spotting patterns. And it's making predictions. And then this is where it gets really clever, because when it's making those predictions, when it gets predictions right, the images get crisper. Wow. So it is continuing to kind of learn from that. And taking that technology and sort of bringing that to bear. It's, I did the maths earlier. That's 12 billion data points every day.
Every day?
Every day. 5 days a week, so it's only 5 days a week, but nonetheless, it's every day. It's impossible for any one of us to do that, and to do it with the kind of accuracy that the machine has. The machine is right about 70% of the time. That's right. Given the sheer volume of data that you're crunching through, to get that kind of accuracy coming through, and that's 70% of the time at an individual stock level. Mm-hmm. So it's right at that level. And then if you look at it at an overall portfolio level, it just really starts to sort of build up from there. So the kind of how the machine works, how it's all come together, the amount of data, it's impossible for you or I to do that. We could sit with our calculators all day and we couldn't do it. We also, as human beings, we suffer from FOMO. We can't help ourselves. You've got this fear of missing out, and you'll end up going into something at the wrong time. Machines don't suffer from FOMO. Machines don't take holidays. Machines don't catch COVID. Machines don't fall ill. Machines are just there the whole time, kind of working for you. So if you buy the prognosis that the machine can actually deliver these results, it's always there and it's always working for you. And it's about that Iron Man piece. It's then about how you use that to make the best of it.
Wow. I mean, 12 billion data points in a day, obviously unimaginable as far as human brain goes. Uh, so Bruce, I don't know how much you have tracked of late Indian markets, but in last 2 years, what we have observed, a lot of new demat accounts opening from tier 2, tier 3 cities, youngsters, and it is very difficult to expect them to know investments and finance and calculations, etc. But at the same time, we want them to be disciplined, right? We want make them growing their investments and wealth in a very, very disciplined and calibrated way. Uh, how these efforts at Bridgeweave and with their products are helping in that direction?
So, I think what we're doing, what you're doing is very similar. I think, the message I've been investing in financial services for over 30 years. I think the message is always the same. You have to diversify. So it doesn't matter whether you're from tier 2 or tier 3 or whether you're from a metro area. You've got to diversify your investments, and that for me is an absolute truism. And that diversification, I personally think machine portfolios play a part in that. But I would never say to someone that they should have 100% in machine portfolios. You should have them as part of a portfolio approach. And I think that discipline for me is discipline about asset allocation and diversification. It's also discipline about staying invested. Because if you've got a process that works, and I see this happening with the machine all the time, there will be ups and downs along the way, and it's about staying with it. It's about staying invested. And there's so many data points out there that just prove that the times you come out of the market always prove to be the wrong times. So staying invested is a kind of really important thing. So stay invested, get the benefit of compounding, and make sure that you're properly diversified. And I personally believe that a machine systematic portfolio is part of that diversification.
I mean, very true. This is exactly what we have also observed. People panic, get out of the market, take out the money, and miss out on the compounding benefit.
Yeah.
And second, obviously, missing out on diversification. So you are raising the very valid fundamental points of investments.
Just to keep going, though, if the last 3 years, the markets have gone up. It's been difficult to lose money in the last 3 years. Now, I'm sure there's someone out there who has lost money and they're going to hate me for saying that, but it's true. In almost any equity story, it's been difficult to kind of lose money in the last few years. We're going to go through a period where they're going to go down and they're going to go sideways. And you know what? You've lived through that. I've lived through that. And it will do that and it will come back up again. And how you act through that period and being disciplined through that period is just so, so important.
So, right, while we have seen a good one-way move, but also at the same time, the entire VUCA factor is coming up in big way. So, entire volatility, uncertainty, complexity, ambiguity, this has increased. This has increased and increased significantly. And not only the volatility has increased, but also the quantum that you can lose has increased because the average ticket size has increased.
Yeah.
Right. Now, what we want to prevent our investor or any investor for that matter is to overcome your emotions, overcome your shortcomings or limitations by looking at things like what you just mentioned, diversification and continue with the investment. But specific to this AI mechanism, how you are addressing VUCA per se?
Yeah. So volatility is here. And I'll use volatility to sort of cover it. And actually, volatility plays a key component in terms of part of the data that the machine analyzes. Because whilst there's a machine analyzing stocks, there's a machine that analyzes the market that feeds into the analysis of the stocks, an economic barometer, if you will. So for us, volatility is part and parcel of kind of spotting the patterns. And the benefit with a machine is you've removed some of that emotion. So you're able to actually, very unemotionally spot the patterns and where those winning pieces are. But again, I think that staying invested and staying diversified for me is kind of really important through that whole piece, and trust the process. And if I think about the process that we run with the machines, the machines are clearly built by humans. We've got a mix of investment people, of finance people, of data scientists and tech people, and it's that mix that really sort of comes together to build them. But what you also need is to keep monitoring the machines and keep monitoring the output, and that monitoring process and making sure those skills sort of come to bear in that is important too. And anyone who is investing should know that we're not just programming the machines and leaving them. There's an ongoing effort in tuning the algorithms, in retuning the algorithms, and incremental training of the machine. And all of those things are going on to make sure that it's the patterns that it's looking at are updated for current market conditions. And that's an ongoing exercise that keeps happening.
Excellent. So we have started with two portfolios from Investor AI, which is one is Trailblazers, another is Hidden Gems. Both have their own set of peculiarity towards two different set of investors. So I'll simply ask Bruce on what were the thought process when you were identifying stocks which are having a momentum strategy within inbuilt in that?
Yeah. So I love the names, but Trailblazer is all about momentum.
Momentum, yes.
And Hidden Value is or Hidden Gems is all about value. So if I think about the kind of systematic point and the diversification point earlier, given where markets are today, I would suggest that you would want probably 50% of your systematic piece to be in that value one, and that value one is a mix of fundamentals and technicals. But you're right, the momentum one is very kind of technical driven, and the machine really comes into its own then. And what the machine's trying to do is it's trying to select stocks that have a high propensity to outperform in the next 2 weeks. That's very simply what it's trying to do. So it's looking for those breakout patterns. But what it's also doing is it's saying we can't have everything in one sector. So it's trying to give a nice sector coverage. It's trying to give a nice mix of defensive and cyclical in there as well. And it's the combination of the portfolio creation module with the AI doing individual stock selection. It's that whole piece together that's coming through to create that Trailblazer portfolio. And I think, and it's on Wealth Baskets, but I think the CAGR for that is 60% over the last 2 years. So it's really kind of demonstrated that momentum over that piece.
Right. So guys, the other product we have is towards the value side, where very rarely we have observed that technical and fundamental both has been clubbed together, and this is one such rare occasion. And think about the number of data points which Bruce mentioned earlier, 12 billion data points that they are doing. So Bruce, just this is my last question, is how have you been able to merge the two factors?
I kind of, I love this one because I come from a private equity background, and in private equity, fundamentals is what we think about. We'd never deal with technicals, so it's always fundamentals. Sarthak, who runs all of our product development and our labs business, he very much comes from a technical background, and we have this debate regularly. And across the team, depending the different backgrounds of the investment and the tech people, you've got those different things coming together. And that value portfolio, that Hidden Gems, is a combination of those different skill sets and those different models kind of coming together in one. And the truth is, in the last 2 years, it's been difficult to find value opportunities. Everything's been so highly priced. I think the market we're in today is a perfect market for finding some of those opportunities.
Excellent. So guys, now so far it was all human driven, and this is where Investor AI has, we have partnered with Investor AI, and now bringing to you truly AI driven identified stocks. I'm sure many of you would be wondering that what is this all about, and Bruce was there to clarify all our doubts. In one line that we were discussing earlier, uh, Investor AI, through their AI driven portfolios and individual stocks, is basically taking us beyond our human limitations. It is complementing where our own capabilities cease to exist. And that is where we found that this could be a very, very suitable offering to our clients. And today we have launched our two portfolios. You can see it on our wealth basket. It's available there. So back to Pallavi.
Thank you so much, Mr. Sinha and Mr. Keith, for letting us know more about the product and definitely letting us know the need of the product in the market. A big thank you to all our participants for joining us today. Hoping you all have a good day. Thank you.
Thank you so much.
Thank you.